Good morning, traders, and welcome to the Buyer Traders Morning Show. My name is Charles. Today I'm joined by Paul. How's it going, Paul?
I'm doing well. How are y'all?
I'm doing good. We got a couple of good mornings. We got Laura with some thumbs up. So if you guys have not yet, please smash that like button to let Paul know you're having a good day. All right, I will jump into the live markets for a second and talk about what I think is happening and how I think we should carry ourselves today. Okay, so I've been talking for the last few days about the fact that the market is pinned. The market being pinned just basically means it is in balance over a multi-day range, and that balance is driven by machines. It's driven by computers. They just don't want to let the market go anywhere. I believe that is still in play this morning and that we are still in balance. If you were watching the channel yesterday, if you're a member of the brigade and you were watching the brigade live stream, you know that I was talking about a trend line that we had on the daily that was something like this. And I was basically saying if we spent most of our time throughout the day below it, we would likely be heading down to the balance area low. If we spend most of our time above it, we would likely be heading up above the balance area high. And instead, we spent the whole day basically right on that trend line, going nowhere, doing nothing. But now we are opening below it. So that tells us we are probably heading down to test the balance area low. I would mark that level as somewhere around 58, 55. So that doesn't mean the market has to get to that level to a tick. It doesn't mean it can't go 20 or 30 points past that level. It absolutely can, but just that it is likely to go to that area and try to do business there. And then we find out if there are buyers waiting, right? The buyers that were stepping in last week, defending those levels, do they step in again today? Okay, so I would describe myself intraday today as slightly bearish, looking for a test of that balance area low. Now, what happens when we get there will affect how I feel as a swing trader. Okay, if we get down here to the balance area lows, remember we're talking 58.50s. If we get down here and then the market instantly reverses right back up. Now, again, in this moment, we're talking about swing trading. So the term instantly doesn't mean over a 5-minute period. It means like throughout the day. So if basically today at some point we poke below and then today by the close we're back above, then I will be bullish on a swing basis to turn around and head back to the all-time highs. My reason for that is because the all-time high was made in an overnight market, making it weak. I never ignore an all-time high that was made in an overnight market. The regular trading hours always comes back for it eventually. Now, that doesn't mean it has to come back for it in the next few days. If we get below the balance area low and we start to get new selling, I'm not going to worry about that all-time high at all. I'm going to be focused on momentum to the downside, okay? But if we get that look below and fail of the balance area, as a swing trader, I know probably at least by the end of the week, we're going to be heading back up to those all-time highs. So for now, intraday, I'm bearish to look to head down and test that balance area low at some point today. And then by the end of the day, I'll be looking at the market as a swing trader. Did we get down there and stay down there and bring in more selling, or did we just poke down and reverse back up? And that's kind of my main focus for today. Now, when the market opens, it doesn't mean it's going to go straight down just because I believe we're heading to the balance area low. Unfortunately, when we are balancing by pin, when it is the market artificially being kept in a range, they don't go in straight lines. They go sideways for very long periods of time. They make it seem like they're going the opposite direction, then they reverse out of nowhere. It is very tricky. So I am expecting chop first thing this morning. The chop zone in my mind is essentially from the overnight low, which is around 58.61, to this node right here that was both the point of control yesterday, regular trading hours, and overnight. So we'll call that 58.88. In between those two, it is going to be very, very choppy. Very, very hard to know when to enter trades and which direction the market will break. If the market is able to get back above 88, they will likely head back up towards the overnight high. And that could be enough of a slingshot to start moving up towards that all-time high. So I would not be bearish if we got above 88. I'd be neutral to bullish, certainly bullish intraday. If we get up there to that area and get smacked down, I just have to assume we're going to keep going sideways. And if we get to the overnight low and we get new selling, then I will get very bearish very quick. But I'm not expecting giant moves. I'm just expecting to head down to the 50s, okay, to the 58.50s. So that is absolutely shortable, resistance at the overnight low, but I want to be getting in with a larger trade, looking for less distance rather than trying to stay in a trade that may trend lower all day. Okay? So that is how I see the markets.
If I could interject just for a second, one thing that I think is relevant is that we are in kind of peak earnings season. So a swing trade held overnight could be subject to fluctuations of some of the larger underlying shares. So
that's a great point. Yeah, that's a very good point. And just the fact that it's a chop zone, just the fact that it's a balance by pin area. You know, back in the day, one of my favorite trades to take was a look below and fail of a balance area low because it always went straight to the balance area high. It was like magic. But nowadays, it doesn't necessarily go straight there. It might go up and come back down and go up and come back down and then go up and then finally make it up there. So, yeah, I do have to accept that risk for sure. Anything else you want to mention, Paul? I'll hand it over to you.
Let's see. I mean, I've looked at NQ. NQ is doing very much the same thing. Europe took us down overnight. So it was 3 a.m. my time when Europe opened that it started dropping. And so I guess the European markets have led recently or have been allowed to lead when they, in terms of where price is going. So there's not really that much going on. I think we're on the U.S. side, I think there's doldrums ahead of us for in anticipation of getting the U.S. election out of the way and getting that clarified on who the next president's going to be and the makeup of the Congress. So other than that, I think that's kind of our no threat of volatility in the next 2 weeks, so to speak.
Yeah. I mean, we'll have to wait and see. Somebody else brought that up in the chat the other day that they think the market's going to go nowhere till the presidency. I just feel like, or till the election. I just feel like when you start thinking like that, that's when out of nowhere we have a 150-point day. You know what I mean? Like that's when out of nowhere the market just shocks everyone and does some crazy thing. And then probably retraces right back into the range the next day. But I just say I'm going to kind of ignore the fact that there's an election coming and just trade it tick for tick, day for day, based on what I'm seeing. Right now I'm seeing balance by a pin, which means we're going nowhere, which means we're just balancing. But I'll take it one step at a time.
Yep. So, but on the international front, there's not really anything going on. There's just surprisingly, Russia's back in the news with a BRIC conference. So it's amazing that the BRIC is still a thing after 25 years.
Yeah, they're trying to make it a thing. They're working awfully hard, but capital's not flowing there.
You would think after 25 years it would be. I mean, that was kind of the idea.
Yeah.
But such is life.
Such is life. Truer words, man. Truer words.
I don't know. I'm just not enthusiastic about emerging markets from time to time.
Yeah.
So.
It is interesting. I saw a tweet the other day that was talking about that book, The Rise and Fall of Empires. And it was talking about how we kind of forget how every great empire that rises and falls, no one really sees it coming. You know what I mean? The empire that is in control, everyone assumes is going to be in control forever. And then the empire that overtakes them out of nowhere, generally nobody saw it coming. You know, the most recent one being when Europe took over from the Ottoman Empire or whatever. And it was like no one saw it coming. And it was like out of nowhere, it just changed. So, you know, I don't fault them for trying to come up with their own system and try to take on the powers that be. I think that's just human evolution. But
point of history, though, the Ottoman Empire was sick for a long time before it finally collapsed. Just saying. So they were the sick child of Europe that the British monarchy and the Russian monarchy considered for quite a while, for like many decades before it finally collapsed. Sorry. But.
Yeah, well, that contradicts what my tweet that I read said, Paul.
Yeah, well, there's the tweet, and then there's the books. There's some of us grew up in bookland. What can I say?
No, I mean it's it's just the general idea that, you know, if I was a head of state, I would constantly be looking for power grabs. just because you never know when something can shift and, things can change.
I suppose it's a change in vitality. That's what causes empires to collapse. But maybe we're getting too far into the weeds. But I think the U.S. itself is quite dynamic still. The whole internet phenomenon for the past 30 years has proved to be quite a big influence on the world, and I don't see that diminishing. But.
Yeah, no, I agree. The technology is sort of the secret to keeping momentum going. As long as you keep being on the cutting edge of technology, you're always going to be on the cutting edge of economy.
Yep.
Very cool. All right. Well, any questions from the chat? Kind of a short one today. We're expecting balance. We're expecting a move to the balance area low. Nothing really exciting there. Nothing exciting in the news. So if you guys have any questions, hit us in the chat. Otherwise, we'll call it a day. We've got a question here. Can you review yesterday's best trade entries? Sure. So, contextually, where were we at yesterday? Well, we knew we were in balance. We knew we were balanced by pin. We knew we didn't know if the market was going to go up or down, but that once it did, it would likely visit the overnight high or the overnight low. So you have an A and a B period that basically goes nowhere. It's a very tight range, and it doesn't really give anything away. Okay. Then in the C period, you had a very quick reversal. So it actually looked like in the B period, the market was going to go higher. It kind of had all the feelings of like, this market is going to go higher, it's going to go higher, it's going to go higher. And then out of nowhere, it just broke right when the C period happened and started to head lower. So at that point, we must recognize that the momentum has begun to the downside, right? The C period low, breaking the initial balance low, increases the odds, the market is going to go lower. And now we're just looking for opportunities to enter trades. I'd have to replay the day to remember exactly how it played out, but I think it was a little bit tricky in the beginning of the C period. It looked like maybe it was going to pop back up, but at some point they started to build volume lower. I think it was right around here, right around 58.90. So to me, at that point, my mind was telling me the market wanted to test the overnight low. Okay. So I could get in trades targeting a move to the overnight low, right? And how you choose to enter that trade is a kind of a personal thing based on what you're seeing. For me, I first look for the understanding of what's happening. Okay. We have momentum down. The market is heading to the overnight low. So I have a direction to trade. I have a target for where I'm going. It is just a matter of figuring out where can I enter. Am I seeing resistance? Am I seeing a spot where the market is pushing into a certain level and getting smacked down again and again? Okay, great. Let me put a limit sell order in right at that level. Let me get short and put my stop at what would happen when the market reverses. Okay. So for me, the first trade was that trade to the overnight low, taking profits there. Okay. Then we printed the D period. Now, once again, in the D period, it was very tricky because we'd left behind this huge set of single prints from the C period. And we were saying like, the market might need to come back up and backfill some of those single prints, right? It might need to head back up, but it didn't, right? It immediately started to trend lower once again. So same thing. I can now look for targets to the downside, this large cumulative node here or this large cumulative node here, right? To get into shorts in resistance, which was right at the C period lows where the resistance stepped in, and then get short for those moves lower. Okay, so then when we printed the E period, the market was all the way down near the lows of the day. We now had two sets of single prints that we had left behind. So now we're saying to ourselves, this market is getting itself overextended to the downside. It almost certainly needs to at least backfill that first set of single prints. It at least needs to get back there and backfill that first set of single prints. Well, what did the E period do? It came right back up out of nowhere. It instantly backfilled all those single prints, and it did not get any resistance at the base of the single prints. So when the E came back to the C period low, what should have happened was that it should have gotten smacked down once again, right at the base of those single prints. It did not. It just passed right back through. So to me, that told me the momentum is over to the downside. If we still had momentum, we should have gotten resistance at the base of those single prints. So then the F period kind of going nowhere. Okay. And then the G period giving us cessation was the confirmation. When we got cessation of the trend there, now we're saying, okay, this market is going nowhere. It's going sideways the rest of the day. Now you might choose to take the rest of the day off. You might say momentum is over for the day, or you might choose to say, okay, I'm going to trade balance. I think the market's going to balance. It's a choppy market. It's a pinned market. How do I trade balance? For me personally, the way I do it is what I call bot reversal trades. So that is basically moments where the market reverses at exact levels. J period reversing at the I period high, right? L period reversing at the H period high. L period low reversing at the K period low. J period low reversing at the F period high. M period low reversing at the J period low. Now, I'm not saying you should be in every trade that you take, but if you're going to get into a rotational trade, if you want to be selling above the fairest price to do business, the best place to do it is to pick a previous TPO high and just put your stop a point away. If you get stopped out, who cares? You'll get the next one, and then you'll make 5 points, and you'll make back your loss from the first one. Okay? So to me, that was really the best way to trade yesterday. Recognize momentum in the C period. Try to grab some short bites, not a long sit in the trade all day, wait for cessation type of trade, but take profits quickly because we knew it was a bot-driven market, and then wait for cessation, and then look for bot reversal trades because we know it's a bot-driven market. Okay? Any questions on any of that?
It all looks good to me. We'll see if we can do that again today.
I do think we're going to get another day like that today. My guess is a poke down to, the 85, or sorry, the 58, 55 area, and then a reversal, and then sideways like yesterday. So let's see what happens. Thank you, Paul.
Thank you, guys.
All right, bye, everyone.